What's going on, traders? In this video we'll go over price action fundamentals that will help you read the price action better. You don't need no indicators. You can learn to read the price action on your own with just your two own eyes. The market started with a gap, and what we can consider this as a legit bullish leg working higher. You can just imagine the bullish candles working higher, and for that reason the first thing I need to do when I'm analyzing the pre-market structure is I need to follow the channels, because when there is a channel in play and there's a break of a channel, you're not expecting reversal just yet. You're expecting for price to create a new extreme of the previous channel. So this is the uptrend that is right now the current trend, and the market is working lower. Now I'm going to use the same channel rule for the downtrend correction as well, because it's going to apply even on the shorter term scale as well. And you guys can see there's the first break of the uptrend, but I'm not selling yet. I'm expecting a new extreme. And also there's the first leg, pullback, second leg, two-legged correction, second leg, two-legged pullback at the proper context, at the proper key entry point is a high probability setup. So when the downtrend played out with the break and a new low and the two legs down, the market resumed and working into clear new extreme form. So at this point on, I have a break, new extreme form, and this uptrend structure is now considered done. Okay, you can have an inclination, maybe looking for a wider uptrend like this, but this is more of a range-like looking structure, big move up, big move down, big move up. Also, I have a one leg working higher, I have a two-legged correction, and I have a second leg working higher. Price action market geometry is real, it works, and measured moves are real. We came just a little bit of shy, nothing is perfect in price action, but this is the first leg, correction, second leg up. So once we came up shy, and you have a break and new extreme, you're expecting correction or straight up reversal. And look what you have. You have a strong bearish move below the exponential moving average, which is indicating strong bearish momentum. And we have a high probability setup that is going to be a reversal pattern. Why? Because the uptrend played out. So uptrend is no longer in control. I have a strong push below EMA indicating strong bearish momentum. I have two attempts to go long. First entry long, pullback, second entry long, but it's too late. The uptrend is already over. I'm below EMA and the second entry long failure hasn't moved too far. It's right below EMA. So this is a textbook reversal pattern. This is a high probability setup. This works 90% over time. And market strongly pushed lower. Now you're drawing the short-term trend lines just like you was right here. And once you have this bounce at this point on, you have a micro triple bottom right here. You're going to have to draw the support. And I'm going to show you it looks exactly the same as we had last Thursday. Observe the price action and let's take a look at the last Thursday. We are right here. We have one leg working higher, we have two-legged correction to the downside, and we have a second leg working higher. So the uptrend played out and you have a strong bearish move down, and you guys can see how the support was established at this point on. And when I see a support like this, I'm instantly going to copy it and put it at the top. And not only that, there's a possibility for the measured trading range, two-tier trading range, and it can come into play. So the first thing you're going to do, you're going to put it at the top because this is the move that generated the strong momentum down, and you can also put it at the bottom because a lot of times these measured moves don't just work for the legs, they work for the trading range as well. And the same thing right here, when you have a support right here, the first thing you're going to do, you're going to put it at the top where the downtrend was generated, and you're also going to copy it and you're going to put it at the bottom. This is how I initially had it. I had to put it a little bit lower. This is where it ended up being. Nothing is perfect, but you can see that it's very close to being two-tiered. It's very close to being a two-tiered measured trading range. And with the reason why you're putting it down here, because in two-tier ranges, there's a higher probability that the market will retest the support at the bottom of a trading range. A lot of times, it's okay to just put it where the uptrend started. Today, the support ended up being even a little bit lower. But when you have this downtrend working lower, remember, you have to draw the short-term trend lines. I have a break of this downtrend, so I'm expecting a new extreme to be formed. Just like the price action rules apply here, they apply here the same. I have a push to the exponential moving average, and I have only first entry short. There is no second entry short pullback, and market created a new extreme. So the downtrend is no longer in control. Sellers are no longer in control, and the downtrend played out. And we have a quadruple bottom, and we have a failed breakout. This price broke below this support. I think it's a little bit too early to go long yet. A lot of times you get two attempts to the downside, but you have a first leg, pullback, second leg down. Price ticked everybody lower and instantly reversed. This is a higher low confirmation of the failed breakout, and this is a second high probability setup for the day. Support is holding, downtrend played out with the break and a new extreme, and you have a higher low setup. After that, I'm going to draw the shortened trend lines again, and look what you have. Price pushed higher, and after a break of a trend line, you're expecting correction or straight up reversal. But if I'm going to get reversal, what I want to see strong push above EMA, just like we did had below. I want to see above. But at this point on, price created a micro double top and pushed below EMA. So it's starting to look like reversal pattern may not be optimal. There was a big bullish bar that eventually broke above EMA. The reversal pattern was a little bit delayed. I will mark it as aggressive entry. You really have to know what you're doing. I don't like it because there was a micro double top. And a lot of times when you have a break in a new low, you don't have to reverse just yet. You can have just correction and the downtrend may resume. So when the market push below like this, you never know when you're going to make the additional low down. But after such a big bullish bar above EMA, I can definitely see why price would go higher, and is a smart entry here. So I'm going to adjust the trend line like this. This is right now a trading range, and I'm expecting for price to go all the way up to here. I don't know that we're going to go long here. This is just an idea. Market can do anything. I have a new high, I have a first entry long, I have a first break of this uptrend. So I'm expecting a new extreme to be formed, pull back, and I have a bullish bar. And I'm expecting at this point on, I'm going to draw my trend line like this. I have a little break, new low, and I'm expecting a second entry long to trigger. And I want to go long right here. This is the two-legged pullback setup. Downtrend played out, and I'm expecting a new high. But look what you have. No trigger above and no trigger above at all. And I have a bearish leg working lower. At this point on, you have to adapt to the market and you have to draw the trend line wider like this. You can see how nice it fits. You guys can see price cannot push higher, and you ticked higher, but you cannot go long above 4 bars stacked and above bearish bars. You want to go long above this bullish bar and you don't have a trigger above this two-legged pullback. It stalled and there was no good entry. Price broke higher and instantly reversed down below exponential moving average. This is a failed second entry long, high probability setup, and look what it resulted into. All right, so you may be wondering, how do I know when I'm looking for second entry long or failed second entry long? If you were looking for second entry long on this bar, that was the right idea because you're looking for a new extreme, but the setup didn't happen, so you're not going to force it. Once you don't have a trigger above this bar and you don't have a trigger above this, which shows EMA hold price broke below EMA, and basically you have to throw out of the window the second entry long idea because you now push below EMA and EMA is supposed to hold. So this is just a nice trap that trapped every trader who went long way too late, who trying to gamble, not sticking to the rules, and price reverse. And this is a failed second entry long below EMA, big bearish bar, and this would have generated a gigantic runner. And you're going to have to draw the shortened trend line again because this move is not proportionate to this one leg down. So what I'm going to do, I'm going to draw downtrend. I have a break, first leg down. Remember, I'm not counter trading yet. Just because I'm at the support doesn't mean I'm going to pick bottom. Downtrend is in play. I have a break, first leg to a new extreme, pull back, second leg to a new extreme. You're far away from EMA, you're below the key level low of the day, and market a lot of times will pull back. At the same time, this was a fairly strong downtrend, and at the time I had a downtrend working lower like this. So this is what I was looking at. It ended up not being valid because the trading range came into play. This was a stronger pattern, but shortened downtrend played out with 2 legs down. We are far away from EMA and market pushed lower. Remember, always drawing the shortened trend lines like this. This bearish bar confirmed this potential downtrend working lower, and you have a first entry long, pullback, second entry long, failure. So this is a second entry long failure. Also, this is the new low, first entry short, pullback, second entry short right here. So these are 2 high probability setups. This is the first trade for the day that I took because it confirmed nicely off the trend line. It's starting to get congested a little bit. I feel there's enough room. I like really how the trend line kept holding. Quick, easy scalp, but eventually the low of the day, the trading range played out, and I should have supposed to be probably patient here waiting for this, but I kind of liked it as a big because it is a 2 high probability setup, second entry short and a failed second entry long, and the trend line kept holding price. Eventually price broke higher and gave you indication that the support is holding, and a lot of time this is very common. These low of the day areas, they will have an indecision area and price will hover around until a clear direction will push higher. So price push higher. So what I'm going to do, I'm going to measure this leg. After we fell right here going lower, I have to change the mind because we were supposed to push all the way down here. It didn't happen. We pushed higher, so I expect new first leg, pullback. This is the first leg down, pullback, second leg down, first leg up, two leg of correction, second leg up. However, price is struggling to push higher. As price formed a micro double top at this point on, I'm going to draw the tiny trading range. I don't think I'm going to go short yet into the support. So I'm just waiting patiently. I have a failed breakout above this tiny trading range. A failed breakout of tiny trading ranges, of trading ranges in general, is a high probability setup. You know what? I'm going to mark it. Slightly aggressive entry, but micro double top forming. EMA is now flat. You're swinging up and down, up and up and down. Nice bullish bar. You have a room to EMA. Price pushed lower. But I think it is better to wait for high probability setup. Not that failed breakout is not, but at this point on, you're coming off of this failed breakout and you're coming off the lows. So you have to be a little bit patient. But I like the fact that it is kind of like a second push higher, because you have this first big leg, two leg correction, you have a first leg up, pull back, second leg up. So for that reason, this is the second push higher and I kind of like it. You have a lower high setup, ticked higher, instantly reverse down, but you're way too close to the support, and this is the outside reversal engulfing bar. You're going short directly at the low of the move and also at the low of the trend line. This is what dangerous when it comes to these engulfing bars. A lot of times there's going to be a little bit of a pullback, and there's a new high, first entry long, pullback, second entry long, failure. Same setup that happened right here. First entry long, second entry long, failure. First entry long, second entry long, failure. First entry long, second entry long, failure. And you have first entry long, second entry long, failure. A little bit congested, not the greatest entry, but it is the high probability setup. You have a break, you have a new low. Price is hovering, and you guys can see how we are struggling to push to the low of the support, and this is telling you something. There's starting to be a little bit of an imbalance at this point. When you see EMA flat like this in the middle of those bars, you're just sitting patiently. EMA keeps being flat, you're not taking any entries. Market is still struggling to push down to the support, and for that reason this failed breakout is not ideal, because there's a big gap. Price failed 3 times to make it down to the support, and we keep pushing higher, we keep pushing higher. If anything, you have a high low setup that you may want to consider going long here. I still think it's a little bit early to go long here yet. I would like to see a second entry long to like a pullback, but price push higher. So what I have to do, I'm going to draw short-term trend line like this. I'm going to do like this, because at this point on, you guys can see how price broke this support with the big bearish rally down here, and this is the breakout area. And a lot of times price will test the breakout area right here, and this is what the price is working on right now. We came from the low, and we have to see this breakout area to be retested. So price is working higher. I have just first entry long, price is pushing higher, and I have a retest of the breakout area, break at a new extreme. I still don't want to go short yet. It would have worked, but it feels kind of like a top big trade. You never know how many pushes higher you're going to make. This is just a first leg to a new extreme. If this was second leg to a new extreme, that would have been better, but this is the breakout area. Price broke. You're going to pull back higher. You also have the downtrend. There's an opportunity and possibility for drawing your trend line either like this, to look at it as a spike and a channel, or to look at it like this, kind of see a larger channel. Personally, I didn't feel trust in those uptrends, because a lot of times when you have a strong bearish move down like this and you have the breakout area and price is working on its way to the breakout area, a lot of times the trading range is the bigger pattern, is the major play, and I just never really felt the need to play the trend line. I focus on the trading range, and you guys can see it. I think it ended up being valid because price broke higher, turned down, and we came back into trading range. A trading range ended up being a valid pattern. But if you look at it like this throughout the day, it really fits nicely as well. So you can say that this is not valid, but me personally, I didn't really trust it because I played the trading range for the most part. At this point on, price is still working higher. You still don't want to pick top at this point yet. You just have to draw the short-term trend lines. You have a little break, move to a new extreme. The trend line is holding, but you have horrible congestion. You don't want to go long here. You'll push higher, push lower. Trend line is holding, yes, but you have over 10 bars stacked. EMA is being flat. This is a little congestion now. You have a little failed breakout. You broke to the downside. Isn't it reversed? You know what? I'm going to mark it because the trend line is holding so nicely. But I really didn't like it at the time because I really was focusing mainly on the trading range because of the breakout area. And after such a strong big move down, not really want to go long yet. But you can't go short either because EMA is just flat, and the congestion, the consolidation area ended up being very, very long. You guys can see EMA is flat the entire time. It's completely in the middle of those bars. So this is a no-no. You can't take no entry here, no short, no long. If it's tempting to both buy and sell, you want to sit on your hands and you're coming from the failed breakout area being retested. So you're most likely heading all the way down to here. So I'm going to draw the shortened trend lines right here. I have a break. I have a new extreme, but this is a trading range now and it's a healthy one. You're coming from the both sides, up, down, up, down. So I expect naturally for price to reach all the way down to here, even though I have a micro break and a new low. When EMA is holding price, I still expect for price to go down to this support. I have a new low, first entry short, pullback, second entry short, new high, first entry long, pullback, second entry long, failure. Double trap. Double high probability set up. First entry long, second entry long, failure, and a second entry short. EMA keeps holding price. We are waiting for price to go all the way down here from the top of the trading range to the bottom. I will only mark it just in case next time in the future there's going to be a better setup. I didn't like taking this. Look at this overlap stacked congestion. A lot of bars just stacked. You know, EMA is holding. That's the only thing that really is working in your favor here. This is just as an example that the context here screams good for you to go short, but you don't really want to take this particular entry because if you enter below this bar right here, your stop has to go all the way up to here. So you cannot move your stop up here nor up here. So you enter here. Let's say you sneak in a few ticks back with the limit order. Your stop has to go all the way up to here, and probably all these highs are so close to each other, you may as well just put it at here. And this is horrible risk to reward ratio. You're scalping for this and risking this. For that reason, this is not the ideal setup, but you have a break. Big move to a new extreme. Once again, failed breakout, and most breakouts of trading ranges will fail. Just like this one, just like this one. This one is too early to go long here. Make a note how I'm not marking this. I'm not picking a bottom. I'm not cherry picking. This is just a first entry to go long. Here was a little bit of a first entry, and this is the second entry technically, but this was above bearish bar. So this is the first bullish bar, and a lot of times you will get the second move down and you will get the second bullish bar, and that would have been the better entry. Not this entry. This is just a bottom pick that is hard to pick. A market pushed strongly higher above EMA, indicating strong bullish momentum. So I'm going to draw the trend lines again. This is all you're doing, drawing the trend lines, waiting for them to play out. You have a break, new low, you have a break. So expecting for price to create new high, there's a new low, first entry short, pullback, and second entry short failure. And EMA is not holding price. You pushed below exponential moving average, and that's not a good sign. If you want to take a high probability reversal pattern, EMA needs to hold price. That's the best reversal pattern there is. There was a higher low confirmation of failed breakout, but you're going long way too high. It already moved quite high. For that reason, I'm not marking it. So there's a trend line working lower. There's the first lag, pullback, a second lag, first entry long, pullback, second entry long. You still have this uptrend. You're waiting for a new extreme, and you have a second entry long, two-legged pullback, small little bar, worth the risk. Unenterable scalp already worked without you getting in. But for that reason, two-leg down, downtrend played out with the break and a new low. You're still waiting for a new high to be formed. You're coming from failed breakout. At this point, you guys can see how you keep making new highs, you keep making new highs. You actually have a new low right here after the downtrend reset the count. First entry short, pullback, second entry short, failure, big bullish reversal bar, attempting to create a new extreme, and the new extreme was formed. So expecting a correction at this point. So I'm going to draw the shortened trend line. I have a break, new low, and I actually took this trade right here myself. I was looking at it. I had a little bit of a spike and a channel at this point on, and you can actually make it a little bit longer, and the channel can be like this. And when I was looking at it, it looked like a pretty strong move up. We kept making higher lows, we kept making higher lows. And when you look at it like this, it doesn't look that bad. You have a first entry long, pull back, little tick lower, second entry long. But this is why the high low has to be close to key entry point. This was far away from key entry point. It was such a small little bar. Once we triggered above this bar, drop my limit order, very little risk, but still. Take a look how price action rules, they work perfectly. In trading ranges, you want to stick to shortened trend lines. You have a one leg break, new second leg to new extreme. At the same time, you have this downtrend working lower, which needs to finish. Your one leg down, pull back, second leg down, measured to the very tick, and you have a strong push to a new extreme. This bar is way too big to take, but strong push above the EMA, once again indicating bullish momentum. And at this point on, honestly, it is better to just take a break and be patient, because you never want to take a lot of trades in the middle of trading ranges. You guys can see it can whipsaw you. It's always hard. Market is pushing higher, keeps pushing higher. You just keep making new highs, keep making new highs, keep making new highs. Market created a new extreme, and you have a first entry long, pullback, second entry long. What you have, two-legged pullback, close to key entry point, not close enough, but this is the first break. You're expecting a new extreme to be formed just like every single time it happened. This is a high probability setup. It was a little bit riskier because price didn't touch the EMA. I didn't like it that much. I waited a little bit. I dropped my limit order somewhere around here. Luckily, price worked. So I caught a great runner. I took 7 points right after this bar form. I instantly took 7 points right here. But for that reason, two-legged pullback with the strong uptrend. Had it close to EMA, it would have been much better. But then you actually have new low, first entry short, pullback, second entry short, failure. Nice strong reversal bar. This time you're very, very close to EMA, still waiting for a new extreme, high probability setup. Hopefully you guys understand that. Just keep drawing these shortened trend lines and just don't do anything. Just wait for break, new extreme to be formed, wait for break, new extreme to be formed, wait for breaks, new extreme to be formed. That's all you do in these trading range like looking structures. You have a new extreme to be formed, so expecting correction or straight up reversal. So I'm going to draw my shortened trend line. Market is not reversing because we keep pushing back above the EMA, so you're just being patient. You have a failed second entry short right here, but this is a horrible overlap at this point on, and you can't justify pretty much going long here. It is very congested, and you never know how much you're taking a chance here, because it can easily reverse on you. So I don't like taking entry here. You have a new, once again, double top or new extreme, strong push below EMA. So I'm going to draw this, and I have a strong push back above EMA, and this is already indicating something. How come when we have a break in new extreme, we keep pushing back above the EMA? We're supposed to be reversing, and we've been in this uptrend since the very failed breakout right here. So there's a possibility that there is a larger channel, and the larger channel ended up being something like this. So price pushed higher, created new high, your first entry long, pull back, second entry long, but you have a shortened trend line in play. Same thing right here, first entry long, second entry long, not the best entry, shortened trend line in play, first entry long, second entry long, shortened trend line in play. After you have a break, after you have a new extreme, then you know that the sellers are no longer in control and you can consider going long. You're below EMA, you're not touching the trend line, so you're unsure. Price pushed back above the EMA, gave you a high-low setup. And remember, high-low is a confirmation of high probability setup. And for that reason, EMA keeps holding price, nice bullish bar, last trade for the day. Market is about to close. So hopefully the video was helpful. Hopefully you guys understand how the two-legged pullback works. Hopefully you guys understand the shortened trend lines is really all you need in the trading range like structures, and it works like clockwork. You keep having breaks, new extremes, you keep having breaks, new extremes. If you're extra careful, that's better. You can never go wrong with being extra careful. Look how many setups there are. You need to take 1 or 2 trades per day to live comfortably, so you don't need to take all of these trades. Just because you're getting a little bit confused at some area on the chart, that's completely normal. You're going to get confused. It's not going to be as easy live when you're doing this after the fact, but you first need to do it after the fact, then you can do it live. So I'm going to wrap it up. I'm going to see you next time. Take care, everybody.